Gentlemen, this is your webinar host and Senior Market Analyst Jose Tormo speaking, broadcasting to you live here from beautiful Orlando, Florida, making sure everyone here has audio and visual clear on their screen. If you'd be so kind to confirm by typing in yes or A-OK, that'd be fantastic. Aloha to you, Jerry, as well. Good to see you, Mark, Daniel, Eon, thank you, Ruben, Luana, thank you, Herbert, Christopher, whole gang in the room. Good to see you guys as well and girls, and thank you for joining me here this morning as always. Want to share with you why we're the leaders in trading technology and investor education. And again, ladies and gentlemen, today we've got an opportunity here for a lot of you to excel and to find great trading opportunities all over the board with beautiful entries, equity management, and just taking advantage of the markets before the markets try and take advantage of you. And ultimately, you'll see how this works. But today, folks, before we go live to the market, I want you to know that there's no such thing as an undefeated season at trading. There are losses that can occur, so always make sure that you practice proper equity management and educate yourself fully before continuing your journey as a trader. Therefore, know what to do if the market does this, know what to do if the market does that, and if you don't, make sure that you educate yourself on how the market moves, not how you want it to move, but just how the market moves in general, and then trading alongside with it with equity management, because we have an awesome and superior equity management plan that we can provide you with what we're going to be talking about today. So what you're about to discover in this webinar today is very simple. It's an opportunity to start making money today with MTI's new grid trading course. Now, if you've heard of the grid trading course, type in a Y or a yes. And if you have not heard of the grid trading course, type in the word no. I want to see who in here has heard of the course, who has not heard of the course. It's an exciting time to be a client of MTI. The technology is just getting better and better and better, and we are introducing this to our clients. We've actually introduced it also at our 23-year event anniversary, which is taking place right now as we speak at the Gaylord Palms beautiful resort here in Orlando, Florida, about 15 minutes down the road from right here. So for those of you that have, you know exactly what this is doing, and if you haven't heard about it, then stay tuned and take some notes, because it's going to be showcasing how you can follow simple strategies to generate extra income, and how this grid trading course strategy is universal and can help anyone generate wealth and freedom by following it and by doing what needs to be done to place trades in this market. Because we don't make money by watching the market, we make money by placing trades in the market. That's why our clients are 103% more profitable than the average Forex trader, because they do things that work, okay? Now, not every strategy works for you. You might be gravitating towards something that perhaps is not working for you right now, or you don't fully understand it. But today, a strategy that's been introduced by Joshua Martinez, this is Josh here, he's the Director of Client Success, is going to help you understand how this market works and what type of expectations you may have coming forth with the new grid trading course. Now, this is new trading technology. The reason why this wasn't brought to your attention many, many moons ago is because it takes a very long time to set up the grids on your computer charts and to manage them, and then to place trades, and then to reset them. It just takes too long to do this. So we weren't able to go ahead and bring that to the forefront. It wasn't very beneficial to our traders, even though it was a fantastic way to trade. Now it has become automated. The technology is here. So it becomes simple to apply to your charts, quicker than a hiccup. With a button, you push it, and the grid is on the screen. We'll show you how that works. But this is to help you optimize any strategy that you might be using right now in the markets. This is to amplify your results. This is to know that this is a must-have for the following traders. Now, keep in mind, if you are a mastermind student, if you are a leveling course student, if you are a target trading student, you're going to want to type in your telephone number and get involved with this, because this is a must-have for those types of traders to make their mastermind entries automatic. You automate and set up their targets, automate and set up their leveling, automate and set up their masterminds. So target, leveling, and mastermind traders, you're going to love this. So stick around and figure out how this can take action with you in your trades. This is also for anyone who wants to win upwards of 70 to 90% of the time in the market, and investors who want to take control of wave movements in the market, because the markets do not move in a straight line. They move in a wave pattern. So what this will do is help you take advantage of that and dominate the market landscape like never before. So let's go live to the market. Let's talk about this. But first and foremost, we're going to do some analysis to kind of break down what this market's been doing with the pound Australian. That was a popular currency pair from this morning's 8 a.m. web presentation that was consistently asked to be reviewed and constantly looked at. So we're going to take a look at it, break it down, show you how to do technical analysis, focus on the grid trading course as well in the smaller time frames, and then show you how this works on multiple charts, multiple time frames moving forward. So again, let's make our way over to the live market, and you should be able to see now the live charting software, the ultimate charts on your screen. When you do, in fact, see the charts on your screen, please go ahead and type in the word yes, that the charts are on the screen here, so we can go ahead and make sure everybody sees. Excellent. All right, everybody here has a nice, clear visual of the Pound-Australian currency pair. And so what I'm going to do is I'm going to show you technical analysis, okay, on the currency pairs, and then I'm going to break down the 1 hour time frame with grid trading to show you how it could be a benefit to you and finding out how to take advantage of this, okay? Now, let's go ahead here and open up the monthly time frame, and on the monthly time frame, what I'm going to be focusing in on is the here and the now. What's this market doing at this point in time, and where do we anticipate it to go, and how can we take advantage of it? Well, first and foremost, okay, this market, it moves in trends, okay? Either trending to the north, trending to the south, or moving sideways. That's the only three things it can do. But even when it's going sideways, it'll still trend bullish and bearish from support to resistance. So here this market has broken the uptrend line right here, and has also equaled, matched, or taken out a low of support by forming a low of 2 to the left and 2 to the right right there. So step 1, step 2, and then step 3, which is identify the left tip of a king crown has been formed. Step 4 would be for the market to identify a right tip. So we don't have a right tip yet formed. And then step 5, draw your new downtrend line and Fibonacci swing here. But ultimately what we're seeing here is this market in a king crown scenario where, as of right now, we're anticipating the market to pull back bullish to form the right tip of the king crown. So in an area where we're looking for the market to take off bullish, we're trying to figure out, do we have an up A-B swing here as a Gartley formation, any kind of up A-B boundary potential? So we're going to take our smart Fibonacci's and draw it out, and we do have an up A-B swing here so far in the direction of identifying a right tip of the king crown. And so we also know that there's a big down A-B swing, but for right now, since the market's at a buy low price point, we're going to focus on this swing right here. And this swing right here is and the A boundary being 1.57850, the B boundary being 1.72024, the C pullback being the 86%, and the D extension being here the 1.18, which is at 1.74575. And as we take that horizontal line and mark it off there, that is what we're seeing so far as the first potential up A, B, C, D swing of this retracement that's been taking place. And logically, the market appears to be moving in an up A, B, C to D pattern. Type in a Y or a yes if this makes sense here so far in understanding what this market's doing at this point in time. Can it go deeper than this? Absolutely. But right now, based off of the Fibonacci extension, this is where we see the market going towards. So what we got to realize is that smaller time frames, okay, have perhaps begun to show signs of making higher highs and higher lows here like this along the way. But the question would be, where do we get in on these movements and how do we take advantage of it, okay? Because if you get in at wrong price points and the market goes against you, you lose, and then all of a sudden the market goes your direction. Well, that's why grid trading is so spectacular, because as the markets go against you, you could still be making a profit when the markets begin to pivot and rally once again. So I'll share that information with you as we go ahead and get started here, but let's take this D extension. Let's link this here to the lower time frame, and it appears that we've got here about roughly 400 pips of opportunity left to fulfill this swing. So as we take this information here from the monthly to the weekly, okay, again, we're just looking at this up A, B, C, D swing opportunity. So we take this information here to the weekly time frame, and by opening up the weekly chart, what we can see here is this market giving us the opportunity to see an up A, B, C, D swing as well. We also want to make sure we have some trend line breaks and clear opportunities. So we're going to take our smart trend lines to ensure that we're breaking trend lines and making headway. And so here you can see that the trend line, okay, is breaking to the north, and the market has rallied retraced, and has begun to extend towards that Fibonacci monthly D extension. So by placing the automated fibs here in the weekly time frame, we've pretty much got here the same AB swing as the monthly, give or take a few pips for the D extension. The D extension here would be at 1,741.64. So pretty much here, right around the same levels is where the D extensions are for the monthly and the weekly time frame, still generating a nice clean up A, up B, up C, and now has begun to move to the D in an ABCD pattern. So do we change the parameters of the D extension here, or do we keep it the same? I would keep it the same. It's, give or take about 100 pips or so, if that, in looking at this movement. So not very much movement. You get the actual target there at 1.745, and so here is 1.74164. So again, not very many pips in movement separates that, so we can keep that still there. But what we're going to try to focus in on now is how do we get from this C that's already moved to the D extension, right? Because there was a trend line break, the market was beginning to rally. How do we capitalize on that? How do we capitalize with that? I mean, on smaller charts, let's take this same target that we have here and continue moving on down to the daily time frame and see if there's any more conservative daily targets along the way. So again, let's zoom in on these charts. And to keep things easy to understand, easy to execute, easy to obey, what we're going to mark off here is very simple. We've got here the monthly A. We've got right up here the monthly B. Here is the monthly C pullback. And this is the monthly D extension. So we have an up A, B, C to D wave movement in the market now identified on the daily time frame. However, okay, this is what we're looking at here. We're looking at the opportunity to see what takes place here and how this works. So we have the market making a higher major high, higher major low, higher major high. Can this market fall first before climbing? Absolutely it can do that. But what we're seeing here is the wave, A, B, C to D. The reason why I wanted to point this out to your attention is because take a look at how the market's been moving from C to D. You can physically see the waves of the market. And so when the markets are waving up, let me change the color here, when the markets are rallying, okay, retracing, rallying, retracing, rallying, retracing, rallying, retracing. When this happens, it's hard to figure out where to get in and take control of capturing as many pips as we need to capture, right? Because the overall objective here is to make pips, okay? If we're trying to force the market to do what we want it to do, it's never going to work. We need to understand how the market moves and trade in that direction. So if we're anticipating it to go up, but yet the market may want to pull back bearish first, that doesn't necessarily mean that we have to change all of our gears and start to now sell the market in hopes that we realize when the market's going to U-turn to buy again. That's not going to be a beneficial thing to do because we can only guess where the market's going to fall to so many times before we get frustrated. If you're going to look to take action on a trade setup, take advantage of the waves of the market. So when it takes you in, it takes you in. If it retraces at a deeper price point, it can still take you in buying as well at a buy low price point, and you'll take the ride on up to that D extension, that grid. The grid trading course, yes, Carol, will cope well with this, absolutely. So what we see here is this market moving in the direction from C to D on this daily time frame. And so by seeing that, what we can do here is say, okay, do we have any more of a conservative target to go after? We can start the Fibonacci swings from down here. And what we can focus in on is that we have not one, not two, but three Fibonacci swings. The market here has now fulfilled a D extension of the third swing, and so now we're in an up AB boundary. So is this market going to begin to retrace to the 382? Is it going to retrace very shallow to the 236 and then take off? That's one of the questions that you have to ask yourself when you're trading is, okay, how do I know the market's going to fall to the 382? Because if you're going to sell the market from right here, and then it does this, okay, then How many of you believe you'd get burned on this trade? Selling to the 382, but then it never makes it there, and it U-turns, and then finds resistance up here after striking the D, and then coming back down to the 382. How many of you would get burned on that move, thinking, man, I should have just stayed buying and then take advantage of the sell when I had a trend line break or an opportunity to see the market coming up? There's a lot of different variables that can take place, right? So it really all depends on what you're trying to accomplish. And in this particular area, we do have an opportunity for the market to fall, but we don't have a high to the left or to the right yet, so we can only speculate if the market's going to fall, okay? So for now, we're still looking to go after that monthly D extension, okay, that monthly and weekly area of the D extension to go after. So this is how we're going to bring this attention to the 60-minute time frame, because now we've already linked that monthly D extension here, okay? And as you can see, there is the monthly D. Let me label this. And here is the monthly C. And obviously the monthly B up here and monthly A down there, A, B, C to D. So there's a formula, okay, that will help traders understand how to take advantage of this. But as of right now, okay, let's just figure out what this market's doing via technical analysis before we go into any type of grid trading to make sure we know exactly what's taking place with Fibonacci's on this and what's taking place here. Because so far, our objective, yes or no, is to trade safely from C to D. Isn't that our objective? Yes or no? So that's always the objective. So if this market's going to go from C to D, we can already see here how the markets have retraced, extended, retraced, extended. Well, what if you get into a market trade up here and it gives you a little bit of profit and then it goes against you, and now you're thinking things are going wrong, only for the market to take you in buying and you make double the profit and you're protected along the way. That's what this grid trading system can do for you. But let's just go ahead and focus on the technical analysis here for a moment to keep things simple and effective, and then we'll bring up the whole grid trading course and opportunity here to capitalize on what it can do for you as a trader. So let me zoom in on this, and we're going to draw our smart trend lines from the low support. There's our smart trend line, and as you can see, this market here is making higher highs, higher lows, and the smart trend line here is to continue, okay, in the up A, B, C, D wave movement. And so here, as long as this market stays above these trend lines, it'll buy. Now, it can retrace here, obviously. It can retrace here and bounce up the trend line and then take off. And that's why I was saying it's not very wise to just look to reverse your positions and sell the market, because it can bounce up a trend line and take off, and then you miss out on the bigger opportunity here. So, but let's go ahead and draw out our Fibonacci's and see where this market's at fib-wise on the 60-minute time frame from the C pullback to the D extension. Here we've got some A-B swings. The market took out the A down here, so we would reset our Fibonacci's to the lowest point of the chart here, which is right here, I believe. Yep. To reset your Fibonacci's. And so here we see this market giving us an 80-20 rule where the market came down, found resistance at the 1.27, and then is now in a position to begin falling towards that downtrend line. However, okay, here's the thing. How many of you would love to have the opportunity to, number one, if you know the market's going to fall, sell with appropriate, okay, what I mean by appropriate is equity management friendly, scale into the market appropriately selling until you get to your overall target, or if you're unsure of how far it'll deeply retrace, to scale into the market buying to your appropriate target with equity management. Therefore, you're never stuck in a, I don't know really what's going to happen here. I can just figure out what direction I want to trade in and then take advantage of it with equity management and multiple opportunities here to capitalize on those trades. Okay? So let's just say for the purposes here of demonstration that we're going to focus in on what this market's been doing here, because obviously this market gave us a 382 pullback and fell deeper, right, but still rallied. And who's to say it's not going to happen here, fall deeper and then rally? So we see what this market's doing. It's been giving us some nice Fibonacci wave movements along the way. But look at these waves and honestly answer this question, okay? When you look at these wave patterns, does the entry in a 1 hour time frame look a little bit difficult to predict where the entry is going to be, especially these shallow retracements and then these sideways movements? Does it look like a little bit difficult environment to look for a trade maybe here, or wait a minute, went deeper here? Does it look like multiple areas to entry that perhaps you'd be confused on if you're looking for a candlestick formation to enter on, if you're looking for one counter trend line break to enter on? Does it look like it could be a little bit difficult to do that? Of course, right? And so a solution to that problem is going to be grid trading, because this is how grid trading is going to work. Now, before I even go into this, let me kind of draw it out for you, because I want to draw out the concept here. What we see this market doing over time is moving in a direction such as trending, and then what happens? The market starts to come back down, okay? And as the market comes back down, then it starts to come back up. And it starts to come back down. Why does the market do this? Typically, okay, the market revisits the same price points anywhere between 5 to 10 times plus. And in some occasions, the same price point is revisited sometimes over 20 plus years. So what grid trading does is it takes advantage of that concept, that the market gravitates towards those price points. The reason this happens, obviously, is because of imports and exports. Okay? Now, as we start to move in this direction, what's going to happen here is that we need to figure out how this works and how to take advantage of the markets. Okay? So in this particular area, what we're going to be doing here is we're going to be showcasing very simple yet strategic ways to get involved into the market by taking advantage of different levels. Okay? Different levels of this market to give you opportunities to enter where you should enter and exit where you should exit. Okay? So for example, okay, if our job is to go after a profitable target up here, and we got in buying in this market at a strategic level right there, then check out how this market can provide you with entry opportunities per level. Here it takes you in, 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 here, here. Do you think you're making some profit by entering these levels here, yes or no? Let's just say that these levels here were 25 pips in distance. Okay, each level is 25 pips away. So you'd be up 25, 50, 75, 100. You'd be up 125 pips, 150 pips, and you get taken it up here as well. So now you're up 150 pips. Okay? Then, oh my gosh, the market starts to go against you. Okay? Well, what happens is, ladies and gentlemen, as the market starts to go against you, what's going to be taking place here is you're going to be taken in on sizing in the market. If the market begins to fall, you'll be taken into buy positions. Okay? It'll take you in. And those might be negative at first, but then when they start to make a profit, they'll be breaking even the original trades you had before you, and ultimately this market begins to move in the direction that you were looking to accomplish, and your trades end up getting themselves a hefty amount of pips when it's all said and done. It's a size-in strategy that helps you take advantage of these markets before the markets take advantage of you. Okay? For example, if I believe this market will rally 400 pips, right? Well, there's different scenarios in the way that market will rally 400 pips. Did the market rally 400 pips? Yes. But it rallied, retraced, and extended. So there could have been a lot of losses for me along the way if I didn't use a method like this. What this mathematical equation does is this helps us scale into the market appropriately. And if the market goes against you, okay, you'll still be able to add to the position appropriately so you can take advantage of the waves or the grid. See, when investors do this, it's very difficult to lose in this market. So let me bring this to your attention here on the live chart so you can see what we're talking about here instead of just a drawing. But does everybody here get the concept so far as sizing into the market with these moves? Yes or no? Let me take here a monthly D. delete this, delete this, delete this. So here we have the monthly D is at 1.745. Again, we're going to color it green to match the 1.18 Fibonacci extension of the monthly D. And so here's the formula and how to figure out the grids. Because look, this market rallies, retraces, rallies, retraces, rallies, retraces, rallies, retraces. Would you still like to be overall positive in your trading, even though there was some drawdowns along the way, because you weren't able to take advantage of that drawdown if you would have been in front of your charts? But the market here giving you those grids, would you like to take advantage of that, yes or no? That's really the question at hand here is, do you want more opportunity for accurate trades? You know, it's a no-brainer. It's for anybody who wants to excel at capitalizing on pips. Obviously, it's a journey, okay? It's a journey because what's going to happen here is I want to share with you how this works. Now, what I want to do here is I want to show you two different ways to trade this. Method number one is going to be, Jose, I'm just, I'm not very good at trading. I don't know what's going on with my trading right now, but for whatever reason, I'm not doing a good job. I'm not capitalizing on the right entry points. I'm not making the profit that I need to be making. Basically, I'm a formula none trader, which means I trade the market, but I have no idea why I win or I lose. I do need structure. I do need steps. I need a game plan that makes sense of the market so that I can win with this formula. And that's a problem that is not a problem anymore. Okay? So for those of you out there that lack structure, sometimes you win, sometimes you lose, but there's no rhyme or reason behind it. This is going to be a streamlined approach that introduces simple rules and methods for placing trades. Okay? You don't have to relearn the market, and you don't have to scrap what you've already been doing. What you need to do is get on board with this formula so you can replicate this for more consistency in your trades. How many of you would like to see that? Type in a yes if you'd like to see how that works. Okay, so here's how this works. Okay, this is for the first trader that has absolutely no idea what to do and just wants to make profit. Okay, so first and foremost, we have to make sure that we understand what the grids are on the chart. We have to figure out what the grid size is, how many pips in between each grid level. So there's a formula behind that. And I'm going to teach you the formula right now. It's a little bit of a learning curve, but I think you guys are up to it today. So here's how this works. 6 different steps. Step number 1 is use 500 bars of memory on your chart. Step number 2 is to measure the highest and lowest point on any time frame. In this case, a 60-minute time frame. Step number 3 would be to measure the distance between the high and low in pips. Step number 4 would be to multiply that distance by 3. Step number 5 would be to divide that number by 2, and then divide that number, step number 6, divide that final number by 10. So, when done right, you have established the distance between the levels of the grid for that time frame. Type in a Y or a yes if that makes sense so far as the 6 simple steps to figure out the grid formula that we're going to be doing this here. Okay? So, let's go ahead and first of all change the bars of memory in our chart settings. Okay, because I normally have 3,000 bars of memory, so we're going to change this to 500. Okay? Click Save. Now it changes it to 500 bars of memory. Okay? By changing this to 500 bars of memory, what I'm going to do now, again, is I'm not going to focus on that monthly D extension at all. I'm not going to focus on any of this. This is just me focusing in on how to make pips because I anticipate the market going up. Okay? So if I anticipate the market going up, I just want to make pips. So how do I do that? Okay, well, here's how this is going to work. Step number 1 was to take 500 bars of memory. Step number 2 is to measure the highest point of the chart and the lowest point of the chart in that 500 bars of memory opportunity. And would you agree that this right here is the lowest point of the chart and this is the highest point of the chart with 500 bars of memory of the pound Australian? Yes or no? Okay, that's step number 2. Step number 3 is measure that distance in pips. So we take our ruler tool, go from that low, click and drag to the high point, and what you can see is 930 pips. Okay, so the distance is 930 pips. Well, we're going to multiply that by 3. That's the next step. So when we take 930 pips and multiply that by 3, we get 2790. That's 2,790 pips. So we take 2,790 pips and we divide that by 2. What does that give us? 1,395 pips. So we take 1,395 pips and we divide that by 10, and that gives us the final number of 139. So our grid levels are 139 pips each. That is the levels, that's the amount of pips in between each level is 139 pips. Type in a Y or a yes if that makes sense so far. Okay, so now we add this to our matrix formula. So when you have access to this course, you're going to be given a link to upgrade your charting software, and that automatic upgrade to the charting software will give you this feature right here. When you right-click on your charts under Buy and Sell, it'll say Matrix. Click on that button and your matrix box will appear, and now we can begin to formulate opportunities to get in and make some income. So as far as number of levels are concerned, Josh is going to be hosting a 4-hour class on why it's advantageous to have multiple levels and why you would want lower levels, like small levels, like 1, 2, or 5 levels, and why you'd want 10 levels. All that's going to be discussed in class. We have a 4-hour class on that. But again, what you're going to be focusing in on here in class is you're going to learn how to divide the market into buy zone and sell zones to manually trade or alert trade or signal trade, to optimize any strategy and amplify those results. Okay? Again, what you're going to be learning here is the formula for establishing the distance, like I showed you, between the levels of the grid for a specific time frame, and how to scale in to maximize profit by taking advantage of the waves that are going up and the waves that are going down. Okay? And all your trade orders will be closed on net pips. It's the only software that closes with net pips. So let's just put 10 different levels, for example. The lots, you can control how many lots you want there. I've got one micro lot there at the moment. The distance between levels and pips is 139. We figured that out, so let's go ahead and put in 139. And pending orders above the market or below the market. Again, Josh in class is going to be showing how this can be a one-sided thing where you can take on trades above the market or take on trades below the market. What I'm going to do is both sides to show you rallies and retracements. And since I anticipate this market to go up further bullish, I'm going to stay with buying on these types of setups. Okay? Now, does everybody here see, because I'm always going to get this question during these examples, so before I go through any more examples, you're going to be taught this in class with Josh. There's 3 different strategies you're going to be learning in class with Josh. A scalping strategy, a swing trading strategy, and a position strategy. Does everybody here see how, yes, there are stops and limits that you can put on these trades? Yes or no? Type in a yes. I got to make sure that everybody sees that, yes, there can be a stop loss. Yes, there can be a limit on these trades. But I'm not going to go over that today because Josh has a formula for different account sizes, different strategies to where that stop's going to go and where that limit's going to go. So I'm not going to be predetermining stops and limits on each trade. I'm just going to show you how to take advantage on closing out of trades with net pips for the trader that doesn't know how to do anything right now and just wants to make pips. So if the distance between the grid is 139 pips, let's just say that that's what we want to do here with our closed orders. Every time the market strikes 139 pips, we want to be taken out automatically, okay, so that we made 139 pips and we can reset our grid and do it all over again. If that makes sense, type in a yes. All we're looking to do is just make 139 pips consistently here. Okay, so we've done that. Again, in class, you'll be taught about the stops and limits as far as the positions, the swings, and the scalp trades. For right now, we're not going to do any of that stuff, but you can already see it here. It's there for you. I already filled the grid out here, the matrix. So when I click OK, now you see the matrix, the grid on your screen. Okay, so how does this work in relation to the market climbing towards, an overall predetermined target that we're going after? Well, first of all, let's focus in on how to take advantage of this so that we can capitalize on it. If we believe the market's going to go bullish, then these would be buy orders that we'd be looking to take on. Okay, so I'm going to build your confidence by going through the back testing of this so you can see how this works. Okay, let's say, for example, this market. Now we've put 500 bars of memory here, but let's say that we knew the market was rallying in an uptrend, and so we placed this grid. And then when the market came down and struck this entry, we got taken in buying right here. Okay? Well, we got taken in buying right there. And our job is to simply make 139 pips because the levels, each grid level is 139 pips away. So this market, we got taken in, right? And this was, basically March 22nd, so almost a month ago. Look how by taking advantage of the market at a buy low entry, the market climbs up, closes us out of our trade for 139 pips net. Type in a Y or a yes if you see how the market closes us out with 139 pips net right there by striking the next level. Now, since we don't know anything about trading the market, we don't know about technical analysis or Fibonacci's, we just want to keep on making a profit. So yes, this trade is closed, Lewis, now. So as long as the market continues to go up, we still have our grid levels associated with that. Now we're going to take on a new trade right here. We're going to reset and re-enter the market buying there. Same grid levels. And as you can see here with our trade, this market here moves in a wave pattern. And right there, fulfilled the next grid level. We made another 139 pips net. Type in a Y or a yes if that makes sense. And since we don't know anything about trading, we want to resize in. We'll recalibrate, get back into the market, buying this market right there for our next opportunity because that's the grid. And now we're just looking to make 139 pips on these moves. Well, what happened here? Our trade comes down, strikes the next grid, so we are sized in buying right here. Okay? And then the market strikes the next level. We are entered once again buying. From our original trade, we're sizing into this position. So our first trade is down, our second trade is down, our third trade is kind of break even. Okay? So as you can see here, as this market continues to kind of move sideways here, you can see right there, this market gives us 139 pips so far on that move. Hasn't closed us out because our original entry here, as you can see, is still in. Okay, so if anything, we're only down on our first and second trade, or our second trade now is positive as well. There's the next one that got struck here. So another 139 pips. So now we're at break even. From our first trade, we're break even. Our second and third trade are up 280 plus pips or so. And as the market continues to wave, right here, right there, our trade is fulfilled. Our original trade is fulfilled of 139 pips. Type in a Y or a yes if that makes sense here so far. So, awesome opportunity here to show you how this works. Now again, wonderful opportunities here. We'd be resizing into the position, recalibrating, re-getting back into the market, because the market moves in a wave pattern. Right here, takes us in, once again, buying. Right there, we're at break even. This is 139 pips, break even, 139 pips right there, fulfilled. Do you see how advantageous this is to help you take advantage of the waves of the market? Type in a Y or a yes if this is an advantageous way to help you take advantage of the markets. Literally. And so here we have 139, 139, and then right here we'd be resized into the position, buying the market once again. Here 139 pips was fulfilled, met. So we resize into the position right there. Another 139 pips, fulfilled. So we'd be resized into the position here, which is where we're at right now with a live trade in the market buying, looking to make another 139 pips, and if it retraces, it'll take us in once again and make us the opportunities there. Having a Y or a yes, if you see how this works with the market waving and how it can benefit you by capitalizing on a healthy amount of abundant pips to take advantage of, because when investors follow this type of formula, it's very difficult to lose because they're no longer focusing on the emotions of trading. They're focusing on how the market works, how to take advantage of this. So what you're looking at here essentially is not even a fraction of what we're supposed to be looking at here, but we've got 1, 2, 3, 4, 5, 6, 7, 8, 9 trades at 139 pips each. That's over 1,251 pips in less than a month. In less than 30 days. With a standard lot investment, that's a $12,510 profit, trading one standard lot. Now, how many people in this room have gone through the emotions, what I like to call the emotional roller coaster of the market going up, going down, going up, going down, where you feel like a hero and, oh my gosh, I'm losing, I'm a zero. Oh wait, I know what I'm doing, I'm great. Oh no, I don't know what I'm doing, I'm horrible at this. Oh wait a minute, this is possible. Oh no, I don't know what's going on. How many people have gone through that emotional roller coaster? It is an emotional roller coaster to live and die by every candle. This market moves in a wave pattern. I want to be the type of trader that all I have to do is open up my charts, and by checking my phone or checking my analysis, I know that I'm profitable and I've got some great equity management, and I know exactly, okay, what to do to take advantage of these markets before the markets take advantage of me. Now, in a situation with a standard lot, of course, to place multiple lot trades, you have to have a lot of money in your account to do that. But what you're realizing is this works for all different lot sizes. You don't need to have a $10 million account to trade like this. This is not to show you that you have to have a big account size. This is to help you generate pips. And when you generate pips, you're generating the income. Everybody here wants to learn the art form of capturing pips, yes? And true, Ray, you do make more than that because of first in, first out, but I just want to show people how this works. You can trade micro lots like this and you're making an income. You can trade mini lots like this, you're making an income. I highly suggest you start small, okay? When the market goes down, okay, Albert, this is right now, for example, me doing analysis that the market's going up. We've done analysis in the pound Australian, right? And we're doing analysis that's going up. So when we see the market going up, That's why I've placed my buy trades with this formula. If the market was going down, then we would do it in the opposite direction. Does that make sense? Okay, so if you like what you see so far, type in a Y or a yes, and then throw out another currency pair. Let's go ahead here and make a decision. Right now, Dale says, Jose, but what if you make a mistake in the direction? Dale, it's a great question because look, if you made a mistake here where you think it's a mistake buying, right there, look how when the market comes down and takes you in and pulls back, even if this market was to do this, right? If you got in buying right here, and the market comes down, takes you in, pulls back to then fall even deeper, the pullback itself got you to break even and gave you some profit along the way. If that makes sense, type in a Y or a yes. The strategy is to help you if you're in an opposite direction that you're supposed to be in, or if you're in the right direction to be even more of a blissful opportunity, a blissful experience than what normal trading environments should be, which I mean, living and dying by every candle. It's not a way to make a living here, okay? So in an environment like, for example, let's talk about here, we've got pound dollar. Okay, we've got pound dollar, euro yen, and pound yen is being thrown my way here. Let's open those up. Okay, we've got here. Let's open up the pound. But first of all, before I go into the pound yen, euro yen, and pound dollar, does this make sense? Just want to make sure. Okay, so let me go ahead and write this down so I have this information. Pound dollar, pound yen, and euro yen. Okay. All right. So let's open those up. We've got pound yen. We've got here euro yen. And we've got pound dollar. Okay. So ultimately, what we have to figure out or determine is what was the direction we were going to trade in, okay? And what is the direction that we plan the market on going to, and then make an educated decision on what to do moving forward. So I can show you what we anticipate the market to do next or what the market's already done. For example, we see that the pound yen, okay, has fallen and has been bearish, okay? So if I draw a grid that shows bearish movement, well, what about now? Because the market's breaking a trend line. We're anticipating the pound yen to go bullish. So what would you like to see right now? What happened from the bearish perspective, or perhaps what's taking place right now with the bullish opportunities? What would you guys like to see? Because we can't put a grid of both bearish and bullish on there, right? And to show you what I mean by that is, let me go ahead and open up, for example, a larger chart. Here we have the pound Japanese yen on a daily time frame, okay? So obviously, the markets were bearish, okay? However, what we got to do here is zoom in, and to kind of give you some perspective here, okay? This market, as far as trend lines are concerned, okay, we have long-term outer, inner trend lines. You can see how this market here has been breaking the trend lines here, and inner trend line broke, outer trend line is now broken, bounce at the backside, so naturally we would look to want to gravitate towards the outer long-term trend line, and that major reversal, by breaking that, would give us the ABCD swing that's been taking place on the larger charts. Now here, on the daily time frame, would you agree, ladies and gentlemen, that this market is giving us a big left tip, center tip, and now a right tip crown formation taking place here? Yes or no? Yes, right? So I can show you what I just did on the pound Australian in the opposite direction as the bears were taking control, but you've already seen how it works in the past. Let's show you what's going to be taking place in the future, right? Because we want to know how to size into the market as it climbs. So in this opportunity here, a couple things. You can start your smart fibs from the lowest point, and with one click of a button, you have your AB boundaries. And what you see is that the A is at 126.092, the B is at 141.715. The C pullback so far is right around a 5.0 level, 382 level here, and bouncing up the backside of a trend line, and also as you can see here, is breaking, at the moment, it's breaking a counter trend line. Those are good signs for opportunities here to begin looking to rally towards the Fibonacci de-extension, right? So the way that I would set this up right now with grid trading is very simple. If this market is going to bounce up the backside and gravitate towards that long-term outer, do you believe that, yes, this market should then fulfill this up A, B, C to D Fibonacci wave movement? But the problem is, where do I get involved, right? How do I get in? How do I know it's not going to be a bad entry? Well, that's why this is so powerful. This is why you need this. This is the new technology that's right here in front of you to take advantage of. 151.370 is going to be the de-extension of this daily AB boundary. 151.370. We'll mark it off right here. I'll color it green as far as a bullish target to go to the north. And so this is where we anticipate the market to climb towards. Okay? And so by taking that target, right-clicking on it, hit the word link object, now I have my de-extension on my 1-hour chart. There it is right there. Okay? So you can see my 1-hour time frame, there is the de-extension. In order for me to begin trading from C to D, from this movement so far to the north, I got to figure out the grid formula. So again, I'm going to take 500 bars of memory, put it on the charts here, and now, again, there is the de-extension that I'm looking to trade towards. Market's climbing here, rallying. If it wants to retrace, it'll retrace and then extend. So I have 500 bars of memory here. Okay, so what's the highest point of the chart? I believe this is the highest point right here. This is the lowest point right here. Type in a Y or a yes if you would agree. If this is the highest point of the 500 bars of memory chart, this is the lowest point right there. Okay, so we take that and we measure it in pips. And it is approximately 480 pips. Okay, so we take that 480 pips and we practice the formula. 480 pips, multiply that by 3 is 1,440 pips. Divide that by 2 equals 720 pips. Divide that by 10 is 72 pips. So each grid, the distance between each grid is going to be 72 pips in distance. If that makes sense, type in a Y or a yes. So we go to our matrix. Open the matrix up. Okay. Here, number of levels, let's just put 10 different levels if we want. The amount of lots, you can control mini lots, micro lots, whatever the case, standard lots here. The distance is going to be 72 pips. Okay, 72 pips there is the grid and what we're looking to accomplish. Now, if we want to just make 72 pips, we'll put in close all orders when the market strikes 72 pips. If we want to go ahead and begin to make more than that, we can leave it open. Like if we want to go towards that de-extension and calculate how many pips that is, right? 400 plus pips, then we'll put in close out on 400 plus pips. Either way. Right now, let's keep it simple. Let's say we want to close out every time the market strikes 72 pips. How many people like 72 pips? I like 70 pips. If the market strikes 70 pips and closes me out, I'm a happy camper. Okay? So again, for a position trade though, you would have a set predefined stop loss and a predefined limit for that target, and then you can trade towards it. Right now, we're going to keep it simple. And with one click of a button here, we're going to go ahead and, well, I didn't even do it. Well, this is fine. But what I did was I set this up to go ahead and make sure that this market is going to give us bull trades only. Do you see how this is only one-sided here? Type in a Y or a yes if you see this being one-sided. One-sided to buy the market. I didn't do bullish and bearish as far as for retracement opportunity here. So if the market falls against me, I'd have to have a nice hard stop because I don't have an entry to take me back in if the market falls to the south. Type in a Y or a yes if that makes sense. Okay, so let me go, whoops, I just closed my charts. Give me 1 second, let me open this up real quick. Apologize for that. I meant to minimize the chart, not to close out of the charting software. When you're live, you're live. All right, we should be back on here in a moment. Okay, so once again, let's put the matrix up. 72 pips was the distance between each level. Let's put 10 different levels. And again, pending orders, I just showed you above the market, which was pending orders to the north. You can do it below. I'm going to do both sides, keeping it as a buy, and I'm going to close out when the market makes 72 pips. And then resize in when I want to with one click of a button. There we go. Now, what you can see is how this market has been working. So, in a case, for example, where, if this is what we see here in regards to taking advantage of the market, let's say we go here and we draw our downtrend line from this high. We've got smart trend lines here, for example, being drawn, smart long-term outer trend lines, outer, and then inner trend lines as well. You're going to have the opportunity here to begin noticing that when the trend lines break, okay, you want to be taken into those positions. So if you see the market right here and you find out the grid, you have your trend lines, doesn't it make sense that perhaps you would only want to set one-sided trades when the market breaks to the north? It could take you in, grid trading, yes or no? Yeah, but for right now, we're doing both sides. Let's just, for example, say, this market here breaks the trend line. When it breaks the trend line here, we strike that level right there. So we're taking in buying right there at that level. Okay? And the market comes, retraces, right there. As you can see, it comes, retraces, and fulfills our 72 pips net as it gravitates to the outer trend line. So 72 pips net was established. And then since we know that this market here is in a bull trend now, we resize into the position, and it would take us in right there. Another 72 pips net fulfilled. Resize into the position, re-get in, right there. 72 pips net fulfilled. Get into the position once again. 72 pips fulfilled. Net. Resize into the position. And again, as you can see here, this is where we're at right now. Market came up, almost struck. We're at break even right now with the most recent trade, but it almost struck the 72 pips. And so if it goes deeper, it'll take us in and size us into this opportunity. How many people see how powerful this can be, especially with the waves of the market, to help you take advantage of this opportunity before the market passes? And this is what we're seeing right now live. This is the most recent live movement. It'd be a buy trade in right now, and this is the grid as we're looking to capitalize on the up A, B, C, D wave movement we've seen. But since the market broke the inner trend line, 1, 2, 3, 4, 5 different opportunities here. That's 360 pips, since the 17th. So that's 360 pips in the last 2 days. 360 pips in 48 hours so far. Again, with the standard lot, it's $3,600 profit. But the goal is to help you make the pips, because the pips is the art form, and that's what's going to generate the income for you, is to consistently make pips in this market, thanks to trading grids like this. Now, let's see here. Sue's a bunch of questions. Could you answer some of them, please? Yes, Sue, sorry about that. We have 303 people in the room, so some people typed in some big postings, so I apologize for that. And yes, Sue, correct. The actual value, exactly. Each trade put in automatically. Richard, each trade will be put in automatically if you're going after a bigger goal. So, for example, if I was going after not 72 pips only, but if I was going after, for example, 400 pips, then yes, all these trades would be in automatically, taking me in until the cumulative effect of these trades hit 400 pips altogether, and it closes me out, which can be basically helping me reach my target way before I even reach my target. Type in a Y or a yes if that makes sense. And again, Bob, you'll be shown all that in class as well, which is wonderful. But again, that's what we see here with the pound Japanese yen at the moment. As long as the pound Japanese yen is going towards that opportunity to the north, we've got our grids to help us trade along the way, take advantage of the markets before the markets try and take advantage of us. Now, let's take a look at the euro yen. Euro yen, pretty much in the same boat, where the market here has given us some trend line breaks, has begun to climb. So one of the ways that we'll begin to go ahead and dominate this would be to set the formula, the bars of the memory, 500, and then take the highest point of the chart, lowest point of the chart, measure the distance. This is the euro Japanese yen right here. So we'll take the highest point of the chart, lowest point of the chart, and that's a 600 pip range. So we take 600 pips, times that by 3, 1800, divide that by 2, equals 900, divide that by 10, is 90. So every grid level is 90 pips. So we take our matrix, distance between is 90 pips, okay? Both sides, right now, close all orders on 90 pips. Click OK. Now we have our matrix here. So as you can see, what this market's been doing is as the market would be breaking trend lines, for example, you'd be having analysis as far as, hey, when this trend line breaks, we're planning on doing this. When that trend line breaks, we're planning on doing that. So if the trend line breaks like this, and you calibrate your grid, now you don't have to be worried about what type of trade should I take. Should I enter the market now? Should I stay out? I don't know what to do. I'm nervous. Listen, okay? There's different types of traders in this room. I already mentioned one of them, which was essentially the trader that is the formula none, that have no idea why he wins or loses. There's another trader in the room, or traders in the room, that are technic fails. Instead of technical, technic fails trader, meaning you perform bad technical analysis, horrible trade execution. You have nowhere to turn. Okay? The problems that you probably are having is that you can't get the technical analysis right, so your trades aren't making money. Type in a Y or a yes if that feels like it might be somewhere along the lines of where you are as a trader. Okay. Josh's class, Richard, is going to be in mid-May. So account reps, if you have the date and time of the class, that'd be great, but I've been told right now it's in mid-May, so it's coming up here in a few weeks. But what this can do now for you, if you're a trader that doesn't know how to do proper technical analysis, is that you can now get a better understanding of how to take the technical analysis into your own hands and start trusting the analysis and place better trades. Because if a trend line breaks, right, and you place your grid levels, now you don't have to take action right now. You can kind of wait the market to come to you. Right there, the market would take you in. Okay, so you're in your trade. Great. As the market continues to move in a wave pattern, there it fulfilled 90 pips net. And by fulfilling 90 pips net, now we're taken into another trade right here. And here's where we're at. The market retraces a little bit and climbs again, 90 pips. Okay? You'll begin to start mastering your technical analysis skills because you can begin to utilize this with all of your technical analysis the right way, which essentially is how we're supposed to be trading in the first place. Okay? You can see here how when you perform your technical analysis, the grid will help you. And if the market comes down, guess what? You're already in a trade. So the market comes down, even if it strikes the next grid level and takes you in at a deeper retracement, you'll get back in, break even, and still make an additional 90 pips. Beautiful opportunities here for you. This is set up automatically. Yes, Thomas, this can be set up automatically. It can be automated. Absolutely. Okay? So right here, we'd be taking in with a trend line break, a 90 pip opportunity, and we're in our 90 pips opportunity here next. So this would be, future movement of what we're seeing here taking place. Type in a Y or a yes if that makes sense. Terry says, Jose, so say you're on vacations or hospital and you just want it to keep resetting a month. Then that would be giving you your target. What I mean by that is if you have a target, now Josh is going to show you all this in class, Terry, but if you have a target of say 400 pips away, then these are just compounding trades along the way. So if the market goes deeper against you and then starts to come back with other trade opportunities, you can make your 400 pips before the 400 pip limit is even struck, and then it takes you out altogether. Okay? But the reality is this, ladies and gentlemen, okay? This course is for anyone who wants to win 90% of their trades by taking control of the wave movements. I'll tell you this, this is a must-have if you own the mastermind, leveling or target trading courses. It's a must-have. This works on any pair, on any time frame, and you do not need to know much about trading to be successful once you learn the grid formula here. So let me show you one more here, and then we'll go to a larger time frame. Okay? Pound dollar, and then we'll go to a larger time frame to begin establishing what's taking place here. Okay? Now, pound dollar. Okay? This pound dollar right now, as you can see, is making higher highs, higher lows. But at the same time, what if this market is moving sideways in a range of consolidation, right? What if this market here is moving in a sideways range at resistance and wants to come all the way back down to support? Type in a Y or a yes, that's a possibility. Right? Well, Jose, we broke out. Well, I mean, yeah, we broke out a little bit, but nothing major. We haven't rallied, retraced, and extended. So as of right now, here's how this can help you take advantage of the market, okay, with setting trades along the way, because the markets obviously wave, as you can see here, from resistance to support. Look how they wave, and from support they wave. So the way to set up this type of trade would be beautiful, because if you're looking to go from resistance to support, first and foremost, let's go ahead and minimize the amount of bars here to 500 and practice the formula simplistically, okay? What I mean by that is what's the highest and lowest point of the chart here? This is the highest point of the chart, and this is the lowest point of the chart. So that's about 548 pips. So we take 548 pips, multiply that by 3, 1644, divide that by 2, 822, divide that by 10, gives us 82 pips in grid, okay? So here's what we're going to do. We're going to right-click, hit that matrix, okay? And now, a cool way to figure this out would be, okay, if I'm going to have this market go from resistance to support, then I just want to look to sell. I don't want this market to go higher and then take me in. If it goes higher, I'm obviously in the wrong direction. True or false? Right, so what you would do is we'd say, okay, let's put, for example, let's put 10 grids. Let's do 90 pips in between each grid, and we'll put it below the market, okay? Below the market to sell. And what we can do is have it manually take us out on 90 pips, or however much the distance is from resistance to support. You know, if that's the amount of pips we're looking to go after, you know, how many pips can this look to take us out at a net pips? So we can go ahead here and measure from resistance to support is a 648 pip move. Well, let's just say I want to get out with 600 pips, okay? So again, let's take the matrix, put a demonstration of 10 levels, 90 pips below the market to sell, and I want to be closed out when the market reaches 600 pips. Whether the market goes all the way down and strikes my support line, or it retraces, takes me to multiple levels and closes me out with 600 pips in between that because the markets wave a lot, I want to be closed out with 600 pips, right? I also want to put a hard stop here, for example, at 12900. So if the market does go further bullish, I don't want to be involved in this trade. So place my hard stop at 12900. Okay. Once I click OK, check that out. I have my entry right now. I have my hard stop, and now I can be sized into multiple levels along the way. So if this market, okay, comes here and falls like this, it strikes 90 pips, that's great. Then it falls like this, that's great. Falls like this, that's great. Because what that would do is it would be 1, 2, 3, 4 trades in my direction. Okay? Now, what's 1, 2, 3 trades at 90 pips? Okay? We have 90 times 3 equals 270. Okay? All right, so we're up 270 pips if this happens here. Well, you know, what if the market then pulls back like this? Okay? Well, as it pulls back, it'll also take you in selling. Oops, that's the wrong arrow. It'll take you in selling here, resizing you in, sizing you in. And then if the market waves back down like this, okay, now we've got 1, 2, 3, we've got 4, we've got 5, we've got 6. What's 90 times 6 here? 540 pips, and we haven't even fulfilled the support line yet. 60 more pips, and we made 600 pips, which was our goal to close this out altogether. And we're taking advantage of the waves of the market to help us along the way with a hard stop there no matter what. How many people in this room like what they see in regards to the simplicity of no matter what the market environment, this can help you to have proper equity management. So it doesn't matter if the market goes against you because you're going to learn mastering equity management. And typically what you're seeing here is that this is going to be an opportunity where traders can begin to generate a healthy, substantial income. Okay, because I know there's a lot of freshman traders in here. And what I mean by that is you don't know if you're ready to trade yet because you don't know where to start or who to trust. Your main problem might be you just don't know where to start as a small fish in a big pond. This is the largest financial market in the world. You just got started, right? You don't know where to start, how to turn a profit. You think of yourself as a little guy. But listen, okay? We're one of the oldest and most trusted Forex education institutions out there. We're not all talk. We have this as proof and more. This is an opportunity to learn how to trade this the right way in multiple environments. Okay, multiple environments. Type in a Y or a yes if this would make sense to you, because then you can continue to watch your trades, okay, in open positions. You have your hard stops, hard limits. Your entries are being sized in. Matrix is the reason behind it. All these opportunities here are going to be a blessing because you see where the market's going and what it's going to do. It's grid trading. It helps you take advantage of these waves. Yes or no? Did this market hover around the same type of price points for quite some time? Yes or no? Did the market not hover around the same price areas? Right? So that's what it's all about, is to help you understand how to divide the market into buy zone and sell zones, how to manually trade. It's a wonderful opportunity here. Now, let me ask you a question, okay? This question is going to be a question that I want an honest, upfront answer because it's going to help us determine whether or not we extend this or not. How many people really like what they see and they would not want to pay an additional maintenance fee for this tool every month, but rather they would rather have this for free with their enrollment for the rest of their career? How many of you would like to have this matrix tool for free for the rest of your trading career as long as you have the ultimate charts on and not have to pay an extra monthly maintenance fee to have it on your charts? Type in a yes or a me if that's something that you would like to have with your enrollment, because here's what I'm going to do. We've been talking about this for the last 72 hours, and we are coming dangerously close to capping off our early bird pricing for this course. As a matter of fact, today's webinars might be the last time that we offer early bird pricing. I'm not sure, but the cap is going to be coming here to a very, very soon stop. Only early bird pricing enrollment students are going to get this matrix tool for the rest of their life for free with their charting software. Everyone else who signs on board later on, we might give a little discount here, might give some more classes there, but they're not going to be able to get the actual matrix tool here that gives you this grid for free. They're going to have to pay a maintenance fee for it, but it's well worth it, but it's still a maintenance fee. So what I'm going to say is this. If before I go into pricing, before I go into any of that stuff, you guys know there's going to be early bird pricing, so it's going to be a great deal. We do have payment plans available. But if you want this tool on your charts for life and you don't have this course yet, I need you to type in your telephone number with the word bonus right now so that when the account reps look at the sheet of numbers that came through today with the word bonus, they'll know instantly that you are in early bird enrollment and you're going to get this tool, this software for free as long as you have the ultimate charts. If you do that for me so real quickly here as I go through the details and the bottom line of how to get involved, that'd be great. Again, it's this matrix tool right here. There will be a maintenance fee for this every month for traders that don't sign up with early bird enrollment. However, if you do have the early bird enrollment, this will come for free and you'll never have to pay a maintenance fee for it. It's a wonderful opportunity there to enhance your overall portfolio and to identify how this works, how to take advantage of it before it's too late. So again, thank you for your telephone numbers with the word bonus, but again, let's go over what this is going to do for you and how it can propel you to the next level. Josh has a 4-hour class. He's going to teach you about position trading, swing trading, scalp trading, how to learn to get upwards of a 70 to 90% win rate. The class date is in mid-May. Okay, your account rep on the phone will tell you exactly what time and what exact date that class will be to amplify your results with optimizing any entry strategy of your choice. You're going to get that 4-hour class with Josh, on-demand recordings, access to the Matrix tool, 3 strategies, checklists for each strategy, manual for each strategy, workspaces from Josh himself, and ongoing access to this class. This is a universal trading methodology. You can trade directly from your charts, manually trade this, alert trade this, signal trade this. Heck, price entries, does not matter. The formula will be yours. This is around-the-clock smart technology for the serious trader that wants to make 2017 their most profitable year yet. Now, we're normally going to be offering 1-month access of follow-ups, which means a live 4-hour class additional to the actual class itself with Joshua Martinez to kind of fill in the gaps of what's been taking place and to kind of put more things together. But all of this analysis, all of this trade setups are shared. And again, the expectations are the following. Optimize the strategy you're using. Amplify your results. A must-have for any target trader, mastermind trader, or leveling trader. This is for traders that want to win 70 to 90% of the time and any investors who want to take control of the wave movements. So what you're getting today is the grid trading course, the manuals, checklist of recordings, live trading follow-up for a month, unlimited class reattendance. This brings the retail value price of the course to $3,495. That's going to be the price of this course in the future with no free matrix. However, ladies and gentlemen, it's very simple. Today, if all this package does for you is save you thousands of dollars in headaches in the market, entry opportunities that provide you that 80 to 90% win ratio, opportunity to make pips close out for you when you're not even around your charts, to help you retire, to help you generate extra income, to help you generate income to travel, would it be worth the investment in yourself to have these types of knowledge and tools at your disposal? Yes or no? And really stop and think about it before you answer that question. Because yes, $3,495 is what this course will be sold for. However, today, thanks to the early bird savings, it's only $19.95, which saves you $1,500 instantly return on investment. So yes, we do have payment plans available, but we're giving you a big early bird savings price right now of $19.95. And also, for those of you typing in your telephone numbers, type in your numbers with the word bonus, because 2 power red hot bonuses are here. Bonus number 1 is I'm going to upgrade you to 3 months access to the live trading follow-ups, which helps you fill in the gaps. Bonus number 2, like I said earlier, lifetime ownership of the matrix. As long as you have charts, you will always have this matrix tool. This is only for early bird traders though, and if you type in your telephone number today with the word bonus, you are an early bird trader. Everyone else will be charged a monthly maintenance fee. I cannot stress it enough. If you want the tool free for life, type in your telephone number with the word bonus right now. We're saving you thousands of dollars with these upgrades. As a matter of fact, it's essentially that we're paying you to take this course if you think about it, because with the 3-month follow-up and also with the lifetime access and the ownership of these matrix charts, folks, the value is over $5,000, and with an early bird pricing, you're saving, essentially the cost of the course is what you're saving. So it's a wonderful deal. Let me go ahead and thank the following individuals who are typing their telephone numbers. Terry, thank you for your number. David and Albert, thank you. Tyree says bonus. Lewis, thank you for your number. Andrew and Gregory says bonus. Lily, thank you. Angel says early bird bonus. Michael says bonus. Thank you for your telephone number as well. Julia and Maureen, thank you for your telephone numbers. Dottie, thank you. David, thank you. Brayley, thank you. William and Bob, thank you. Sabrina, thank you for your number. We got James M., thank you for your telephone number. David P., Fernando, Saleo, thank you. Nolan, thank you. Emmanuel, thank you. Alan, Seppo, thank you for your telephone numbers. Michael E., thank you for your telephone numbers as well. As you're typing in your telephone numbers, remember, check this out. Bonus number 1, upgrading you to 3 months free. Upgrading you to lifetime ownership of the Matrix tool. That brings everything with the bonuses to over $5,485 in value. Take away the early bird pricing we've got going on today for only $19.95. That means you save literally the cost of the course. You save $3,490 instantly, return on investment, just by typing your telephone number with the word bonus here today. But you have to put in your telephone number as well, so that when your account reps go over this review sheet of who put in their numbers with bonus or not, we can instantly put a little note by your profile that says lifetime ownership of the Matrix tool will go to this individual, that individual. Everyone else who signs up later on after the early bird pricing is over is going to unfortunately have to pay a maintenance fee. Not a huge bad thing, but still a maintenance fee. If you don't want the maintenance fee, type in your number. Let's make it happen for you. Let's help you take advantage of this opportunity before this opportunity passes you by, folks. It's a wonderful, wonderful strategy, wonderful tool to help you implement wonderful setups in the market and powerful trading opportunities like never before. But the expectations are simple. And Muniandi, thank you. Also, Murray, thank you for your telephone number. We've got Clive, thank you for your telephone number as well. Jonathan, thank you for your telephone number also. Again, I don't have the link right now to use to sign up, but if one of the account reps can send me the link private chat, I can show you. Oh, never mind, there it is right there. All right, guys, so anyways, your account reps should have sent you a link. Did everybody receive this link for the Grid Trading course to purchase online? Type in a yes if you received the link. If you received the link, okay, it's a wonderful opportunity for you to take advantage of. And again, I sent out the link to everybody as well. When you click on that link, ladies and gentlemen, it's going to take you to a page that looks just like this, the Grid Trading course. Okay, when you get to this page, it just simply tells you what it is. Get on the grid with lifetime access to the Matrix tool and the proprietary Ultimate Trading software tool that helps you make money on the natural movement of the market by positioning your buy stop orders and sell stop orders for $19.95. As you can see when you scroll down, look, it already says lifetime access to the Matrix tool. When you scroll down, it's very simple. If you want to go ahead and usurp a telephone call and sign up online, under billing information, put your first and last name. Everywhere there's a star, just put the information. First name, last name, your address, city, state, zip code, country you're in, phone number, your email address. Click on that I've read and accepted terms and conditions. There's the balance, $19.95. And again, payment information, you can select any credit card you want, American Express, Discover, MasterCard, or Visa. Put in the credit card number, expiration date, when you place your order. Simple as that. It's a trusted site through VeriSafe. We do this all the time with all of our courses, so it'll be simple for you to go ahead and have instant access to this and sign up online without the hesitation of a phone call. If you need to speak with someone and get your questions answered, I would highly recommend that you give us a call or type in your number so we can reach out to you. But that's how you use that link. And the expectations are very simple. Optimize any strategy, amplify your results. Any mastermind leveling and target trading students is a must-have for you. And if you want to win 90% of your trades, if you want to have an investor mindset that takes control of the wave movements, type in your number right now, because this cannot be any clearer than right now with our early bird pricing. This is an opportunity like never before, okay? And again, our red hot bonuses are the following. You type in your number with the word bonus. We're going to give you an upgrade to not one month, but 3 months access to live trading follow-ups and lifetime ownership of the Matrix tool. This is only for early bird traders. Everyone else will be charged a monthly maintenance fee. Type in your number with the word bonus. We'll make sure we put your name next to these bonuses because, again, check out what you're paying. You're not paying the retail value of all bonuses in the course included. Early bird pricing is yours. You save $3,490. Instant return on investment back in your pocket by typing in the word bonus right now, which again is going to be huge. So after the bonuses, you save $3,490, which essentially is the cost of the class, the cost of the course lifetime access for early bird savings. So ladies and gentlemen, type in your telephone numbers before it's too late, because once these early bird pricing is over, then the lifetime access to the Matrix tool will also be over. So I wish everybody in this room health, happiness, and success. I thank you for your time. Most importantly, I thank you for your trust. If you have any questions at all regarding, well, what type of account size would I need for this or that? You know, what type of strategy am I going to learn here or there? You know, what exactly is this? If I didn't get to a topic that perhaps satisfied your curiosity or your inquiry, I'm going to encourage you to have the confidence to type in your telephone number and have a conversation or maybe a one-on-one walkthrough with an account rep so that you can make an educated and logical decision before this opportunity passes you by. Okay, so if you need payment assistance, we can help you with that. Type in your telephone number. We can work out a payment structure deal for you. But again, it all starts with you typing in your telephone number and getting started the right way the first time around. So again, thanks for your time. Thanks for your trust. And ladies and gentlemen, at the end of the day, congratulations. This is a wonderful opportunity to start generating some serious income in the market with some great wave movements to take advantage of. This is Jose Tormos. This is FX MVP. Stay by your phones and congratulations. See you at the top.